A brutal day on Wall Street has capped off what's being called the worst week for US markets in nearly 5 years. A staggering $5 trillion have been wiped out of US equity markets as fears of a global recession mount amid an escalating trade war between the United States and China. It all began when China retaliated against a fresh round of tariffs announced by US President Donald Trump, a move that dramatically escalated tensions between the world's two largest economies. That tit for tat response sent shockwaves through financial markets and brought the worst week for US stocks since the early pandemic days of 2020. All three major US stock indexes were deep in the red by Friday's close. The Dow Jones Industrial Average plunged more than 2,200 points, which is a drop of 5.5%. Similarly, the S&P 500 fell nearly 6% and the tech-heavy Nasdaq wasn't far behind, sliding 5.8%. The Nasdaq has now officially entered bear market territory, down more than 20% from its record high back in December 2024. This isn't just a market correction, it's a market rout. And investors aren't just nervous, they are rattled. Economists say the financial shocks we are seeing now are rivaling levels we haven't seen in decades. Looking at the highest US tariffs in over 100 years and what JP Morgan analysts are calling the biggest effective US tax hike since 1968. And that's not just some historical trivia, that has real implications for businesses, consumers, and jobs. JP Morgan's analysts now say there's a greater than 60% chance that both the United States and global economies could fall into a recession this year. That's a sharp jump from earlier forecasts, and Barclays is painting a similarly grim picture, predicting US inflation will surge past 4% and GDP will actually contract in the fourth quarter, something that typically signals a recession. Porras, for his part, appears to be unfazed. In a post on social media, he dismissed the market meltdown and told Americans to hang tough, insisting that the US labor market remains strong and that this fight is about reshaping a global trade system he believes is unfair. But while the US president is downplaying the financial wipeout, the ripple effects are being felt worldwide. The UK's FTSE 100 dropped 4.9%, which is its worst single-day performance since March of 2020. Over in Europe, France's CAC 40 slipped 4.3% and Germany's DAX plummeted almost 5%. Asia wasn't spared either. Japan's Nikkei closed down 2.7% after Prime Minister called the unfolding trade conflict a national crisis. The global oil benchmark, Brent crude, also sank nearly 6%, adding to worries that shrinking demand from a slowing global economy could drag oil prices down further. Now, markets may be closed for the weekend, but behind the scenes, the pressure is mounting. Governments and central banks around the world are in overdrive, scrambling to contain the fallout and possibly chart a path back to the negotiating table. What's clear is that investors are bracing for more volatility. The trade war that once seemed like a war of words is now hitting wallets and hard. The big question heading into next week: is this just the beginning, or are we already in the middle of a global economic storm? We'll be tracking every development as it unfolds. Stay with the official YouTube channel of the Indian Express for updates.